Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Just want to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look at the S&P after the close on January 3rd, 2012. Okay, I just want to say that this is my third attempt to make this video. For some reason, I don't know whether my mouse is screwing up or something, but I'll reach over and turn on the screen capture program and it doesn't take. And I'll talk for 2 or 3 minutes and I'll look over and go, oops, this wasn't recording. So let's this is round number 3. Hopefully the third time is a charm. What I want to show you today to start with, the most important technical consideration, is that it appears that what we have been looking at as a potential inverse head and shoulders pattern, and it would be kind of a consolidation head and shoulders, not one really at a bottom, but it appears that this pattern broke out today. So if we continue to get some strength, and again, I'd like to see us stay above that neckline. If we could stay above this neckline right here for a couple of days, and that's around roughly the 1268, 1270 area. If we can stay above that for a couple days, then I think that should be enough evidence for us to begin to look for this pattern to eventually make its move up to retest this 1370, 1380 area. So that is the first thing of technical importance, and probably right now the main thing that I think I need to keep my eye on. The other thing is, if we look at a 10-minute chart, I just want to reiterate what we talked about in the weekly review, and that was that little move underneath this line right here on the 30th looked suspect. And today it kind of played out that, yeah, it was suspect. Again, that lazy trading just before New Year's, it just didn't look like there was very much commitment one way or the other here. So nice gap up today. Maybe it's the January effect. How long it lasts, I do not know. But I can say this was an area of resistance that the market achieved a breakout over. Additionally, this teal line right here, if we back up, you can see that this teal line was actually drawn over these two tops back in July. Again, this top in late October, and then it got tagged again in late December. So this little line right here got taken out as well. Now I think this red line is probably going to be more important and more powerful than this line because it has a little bit more of a history to it. Matter of fact, we got to go back a ways. This red line is the tops of the 2007 bull run, drawn all the way down to the 1370 top of 2011. And I think it's safe to say this was a major top. Well, I know that's safe to say. And I think it's safe to say that 1370 was an important top because both of these were marked by head and shoulders patterns, and both of them produced some strong selling pressure. So let's see. Let's see what happens if this line comes under attack. If it does, and if it breaks, then, folks, I would not be surprised if all of this action that we've seen over the past few months really kind of serves as a consolidation pattern that creates again some strong selling, almost puts us, well, does temporarily put us into bear market territory by the definition of a 20% loss off the top. But you can see that has rebounded fairly strongly. So that means that there's still two very important lines that we need to keep an eye on. The first is this red line there I just talked about. The second is this blue line down here. I see these two lines as being the most important things in the markets right now. And the reason is, if this line breaks down, this blue line, if we come back down and take this line out, then that turns all of this into a large head and shoulders pattern that would signal a return trip down into the three-digit area in the 900s or 800s. Okay? But conversely, if we get over this red line, then I think that probably will signal that the market wants to go up and at least retest that mid 15 to high 1500 range that when we came off this bottom, I've always thought that in a perfect world we would get a third tag on this top line. So I'm not making a prediction. I'm just saying conditional upon getting over this red line right here, then the market could be poised to come up and retest those all-time highs in the S&P. However, if that doesn't happen, then we could come down and break this blue line, which would potentially take the market down into that high 800s, 900 range. But for right now, what I'm looking at, and let's go to a 10-minute chart. What I'm looking at right now is the fact that this market did get over some important resistance today and hit some resistance today, this being the neckline of the head and shoulders pattern, which, by the way, I have altered very slightly. I want to show you what I've done. It moves when I move in and out of these different time frames. Excuse me. But if we use the closing prices over here as our neckline, then we didn't really quite get over that today. So this line had been drawn down here over the intraday low, and in which case we did get over it. But to be safe, and before calling that line a breakout over that neckline, I am going with a slightly less or slightly more conservative line here as we approach it from underneath. I had it down here on the shadows of these candles because I wanted a conservative line for if and when that line was to break down, which it did in August. But now that we're underneath it and we're starting to bump up against it, I'm just going to change that for a bit. And you can see that that we got over that just a little bit today, but then the S&P sold back just a bit more. So what are we looking at right now? Well, these two lines right here, this teal line and this purple line, got broken today. They have been resistance. I would look for those now to serve as support. Additionally, let's see if this line serves as support. If that is the case, then what we saw happen today could end up being some type of little flag or some type of pattern. This is very preliminary. Don't hold me to this. Top line I'm okay with. Bottom line I'm not. But this could be a little consolidation pattern here, and if we can get up over 1280 again tomorrow, then I think the markets will head up, break 1300, head up to probably the low 1300s, where some resistance would be encountered here at this line. And hey, you know, it looks like the January effect may be a real thing in 2011. At least that's the way the year started. So let's look for some resistance up here. Again, 1310-ish, and let's look for support now in that 1260 area, as well as the mid 1270s. Let's see what happens tomorrow. See if that works out. Since that was the third time me doing this video, my voice is not feeling too good. But I appreciate you putting up with my hoarseness, and I appreciate you taking time out of your day to watch this video. And my thanks again to those who subscribe. If you're not a subscriber, just think about it. It's pretty cheap. It's like $19.95 a month, or if you want to do it for a year, $189.95. And by the way, I'm not going to keep that year thing going for forever. I think I will probably drop that in a couple of months and just do the $19.95 thing for new subscribers. So check it out. That's less than a really cheap cup of coffee per day. And I think the good news is if there's no way you can spill these videos in your lap and give yourself second-degree burns. So and also the videos will not stain your teeth or dentures. So look, thanks again for watching. I hope you guys have a great 2012, and let's see if the markets can show us some stuff again as they did in 2011, so that we can all make some gains from this. Take care. Thanks a lot.